Welcome to the BF Anderson Technical Report for July the 8th. We're going to be doing this on Mondays instead of Thursdays, mainly because of data flow. As you can see here, now we get right into the charts. The NASDAQ, the good news here is the lower moving average has now turned up, is about to cross over the upper moving average. The uptrend is up, and we had some good volume coming in, some buying volume coming in during the week. Now, on a weekly basis, we're also getting good readings here. However, last week we did have, some, above average selling volume. Nothing outrageous because we had this volume cluster in here prior to that. But you can see here that the 35-week moving average is now turned up. The index is very close to making an all-time new high. Things look very positive there. Now, the advanced decline line continues to be in an uptrend, looks very positive. The high-low index means that we're getting some new highs in here and fewer new lows. And as you can see on Friday, we only had 18 new lows on the New York Stock Exchange. We are really starting to stabilize below that 40 number. The long-term graph, and I want to take a minute here. We really don't want to underestimate the long-term graph. The 20-month, 10-month versus 20-month moving average was a back-tested moving average. One thing about moving averages is that you really have to question which moving averages to use. Well, the only way to really do that is to back-test. And Luis Yamada, who recommended this moving average or these moving averages, says the 10 and the 20 month are very important. As you can see here, we're now turning up on the 10 month, and the index, being the S&P 500, has broken out to an all-time new high. So a very constructive pattern. I want to look at that again here in a minute, and here's where I'm going to look at it. Now, this is the unemployment rate. The economy is really doing very well. And on Friday, we got the June jobs report, which was much better than expected. So let's go back and I've taken off the actual unemployment rate and I've replaced it with the 10-month and 20-month moving averages. Now we can see here, just kind of going back to 1990, we kind of got to a point when we almost got a death cross. Now realize as the line goes down, unemployment is improving. So 95, you can see here that we came close, but continued to stay in a constructive trend. Then as we went into recession in 2001, you can see the turn. You can see where the unemployment rate started to turn up, and we got what we would call a death cross, and that would be very negative. So we had the recession, then we went into recovery, and then as we got into 08, you can see the same scenario. And if we go back to the prior graph, you can see here in 08, we started to get the breakdown in the market in the S&P 500 right around the mid part of 08, whereas the unemployment number started to deteriorate in late 07. So this was somewhat of a leading indicator. Now we got the real bad, Great Recession. Unemployment got up to almost 10%. Then we got the recovery, and you can see that the recovery has been the longest recovery in history. However, I think it's interesting to note that we're not seeing any turn of any kind in these moving averages, which to me says that there really is very little reason for the Federal Reserve to cut interest rates. That is the big controversy right now, but this continues to look very positive. Now, if we start to see a spike up and a turn up and a cross, well, that's something else. But so far, the unemployment rate continues to be very positive. Now, on the fear-greed index, we got into extreme fear. We're now neutral, so it's basically telling us that people are starting to stabilize in their thinking. Now, the S&P 500 hit an all-time new high. This is the 200-week moving average. This is another moving average that seems to have some validity and basically is in a very strong uptrend. The value line geometric index, which is a different kind of index. This is an index that is equally weighted and really does kind of give you a truer picture of what the average stock is doing. As you can see, since 1990, we've been locked in a box. We keep trying to break out. We finally broke out, made a new high, pulled back, made a higher low than the prior lows. Here recently in May, we pulled back, made a higher low, and now the index has turned back up again. Now on the global Dow, just to kind of keep an eye on what's going on internationally, again, the global markets have been locked in a box as well, rallied to a new high, same type of scenarios, the value line geometric. However, is starting to make higher lows, so hopefully we can get these international markets moving. Now I did want to make a point here, and this is the point. We are only 2.9% above the base of the S&P 500. I mean, we are making new highs, but one thing to realize here is strength begets more strength. And so we're only about 2.9% above the breakout of the base that goes back since about a year ago. And so we've got the correction here in December, rallied back up to the top of the base, pulled back in May, rallied back to the top of the base. Now we've broken out. So as a comparison, just to kind of see what, you have to be open-minded here and you have to think positive. We got an extended base here back in 1994. Then we broke out of the base around 2.9%, but then really good things started to happen. So we'll see. Now on the top 5, we are seeing a couple of new names. This is Enphase Energy, which is solar. Stock has broken out to a new high. Looks very, very, very strong. This is Innovative Industrial Properties. I went and looked into this company and found out that they're very involved in the storage of marijuana. This is where all this activity is coming from. They are actually a marijuana-related security. Here's Roku, which continues to act well. We did own the stock. We let it go. Pulled back to the 50-day, held the 50-day, has now broken out, has actually given a new buy signal because we're getting pretty much a volume confirmation here that the buyers are coming into Roku. Roku is looking good again. Shopify looks fairly good as well. We are not getting the volume confirmation that we need because of this one day here, but overall it looks pretty darn good. This is kind of a company that could be a major competition for Amazon. This is Snap, which is like a Snapchat, which is like a Facebook in a way. I've been doing some research on it. Stock has broken out, gave a very nice volume signature. Snap looks good. We are considering it. So all in all, what I'm saying is that overall the indexes are good, everything looks fine, the economy's looking good. So just stay with the program and let me know if you have any questions.